This is The Professional Edge, hosted by Todd, tax attorney, CPA, certified financial planner. We're talking about when to plan. When do we need to plan things? Well, we need to plan before we have something tragic happens to us. For example, like your estate plan, you may have had that New Year's resolution to get your estate plan done, but we're already 90 days into 2021 and you do not have your estate plan done. You haven't even initiated any contact. You don't even know who to call to even get started with your estate planning. So we've set up our website, emcadvisors.com. That is Echo Mary Charlie Advisors.com. On the right-hand side, you're going to see the Ultimate Estate Plan button. It's red. Go ahead and select that. Put your information in, and we'll send the estate planning guide out to you free of charge. It gets the conversation started on who you need to appoint and how you need to distribute your estate. Again, go to emcadvisors.com, right-hand side, Ultimate Estate Plan Guide. We will send that out to you for free. We won't even spam you. So, put that up there on the, that's a good thing, right? So when do we plan? We need to plan right now. We've hit a record high in the Dow Jones Industrial Average this past week. So when do you plan for a downturn? Well, we know the market's going to go down sometime. There's some doomsayers which say it's going to crash. Had some calls to the office on the market's going to crash, and then we talked through that, and it's okay. But I don't know when it's going to crash. Nobody knows when it's going to crash. But if you're thinking that it's going to crash, well, when is the time to plan? The time to plan is now. Remove some risk in your portfolio. And what do I mean by remove some risk in your portfolio? Well, number one, you got to see what's in your portfolio and what risk is there. Different sectors are going to perform differently, and some sectors are expected to rebound, and we have some supporting data on that we look at and advise clients on. Again, estate management counselors is a fee-based advisory, and when you plan, you don't want to be sold anything. That's what stockbrokers do. They sell investments to you. They earn a commission for that, and it can be as high as 5.75%. So when you plan, you want to plan and know how you're going to compensate the individual you're working with. Well, at Estate Management Counselors, being a fee-based advisory, that means that we are on the client's side. We're an advocate. We have to act in the client's best interest as a fiduciary. Again, we don't get paid commission on investment products. That is what I feel is bogus. You don't want to be sold anything. You want to be counseled and advised on things that are in your best interest. So again, when you plan, know who you're working with. That's one thing. What are the credentials of this individual? And I had a conversation with a client that came in, and they said, hey, I talked to a vice president of investments at this brokerage firm. I said, that's great. Why don't they just call themselves the president? They could call themselves anything. They could be the chief financial officer. They can call themselves vice president of investments. They can call them president of investments. They can chief financial strategist. They can give their name and title on any business card they want. That doesn't qualify them at all. You want to probably, when you do your planning, to ask them some questions. What is your undergraduate degree in? That's number one. Hopefully it's in finance and accounting, not in history or art appreciation. That's number one. Number two, do you have any advanced degrees in business? That's a great question, because if they're counseling and advising you on how to allocate your investment dollars in your retirement, you think they would want to understand business because they're allocating the capital, and stocks are actually investment in businesses. So how much do they understand that? The other thing being, what qualifies you to give me tax advice? And they'll probably maybe raise their hand and say, well, I'm not licensed to give you tax advice. And you say, okay, so when I buy investments and I sell investments, isn't that going to trigger a tax event? And they'll say, well, sometimes it might. Yes, that's a true statement. Sometimes it might. Inside IRAs, we know that that doesn't trigger a tax consequence. But what about your brokerage account? Can they give you tax advice on your brokerage account? What about the sale of that commercial real estate, which you might be liquidating, and moving those over into investments or planning your estate? What assets should I actually give away to my kids now, or should I wait and hold these in my estate and have them pass in my estate? There's some pros and cons to that as well. That all combines together. And when you're interviewing this person who is going to help you with your investments, those are questions that they need to be qualified to answer. And if they can't answer these questions, or they're going to have to get another party involved, or another tax attorney, or a CPA involved, then how many people are you going to have on the telephone at one time? And be honest with yourself. When is the last time you had a conversation with a CPA, a tax attorney, the registered investment advisor, and an insurance agent all in one place? Probably not very often, if ever at all. So again, what qualifies this person to give you this investment advice? And then the next question is, ask them point blank, are you a fiduciary? Do you have a fiduciary duty to act in my best interest at all times? Well, being a registered investment advisor, we at Estate Management Counselors, we are registered with the SEC, and we are a fiduciary. We are very happy to be a fiduciary and act in our clients' best interest, not paid on commission for selling investment products to our clients like stockbrokers are, or these 1-800 firms that you're a number and you call this customer service and nobody really knows what you're doing, or you're sort of passed on to these new advisors or another advisor. And to me, I'm not sure I want to be a number if I'm planning my own safe and secure retirement and my investment portfolio and getting tax advice. So to have that one-on-one personal relationship, you're welcome to give our office a call at 877-654-9798. That number again, 877-654-9798, to start that conversation. In today's COVID environment, we're welcome to meet with you down here at the Cunningham Center, or if you want to journey up to Atlanta and challenge the traffic up there. Yes, it is a game. It is a challenge with our 9 lanes of traffic in one area of the city. Or we can do a Zoom call. It's as simple as that. And again, that number is 877-654-9798. That number again, 877-654-9798. So when to plan? Well, when to plan, again, is now, before things happen. And when you're planning, who are you going to work with? What's your plan for interviewing that person? What's going to qualify that person to work with you and give you counsel and advice? Again, professional counsel and advice. And just the name, the title on a business card, Vice President of Investments, that is just the first foray into the questioning. Well, what is a vice president of investments? What's your background? What's your undergraduate degree in? Do you have a graduate degree? Do you have a law degree? Do you have a master's of tax degree? Are you a licensed CPA? Do you hold a master's in tax? Those are questions that I would ask them, because I hold all of those. I'm very proud of that. It's not by chance. It's not some dumb credential that you can do an online class for. These are real credentials, being a licensed tax attorney, a CPA, and a certified financial planner. Those are all things. So when you plan, you need to plan with somebody that can provide you this professional counsel and advice. And again, you don't want to be sold anything. People don't want to be sold. They want to be counseled and advised, and what is in their best interest to work forward going that way. So again, we at Estate Management Counselors pride ourselves on being that fiduciary, being a registered investment advisor, and we work with our clients to make sure that their estate plan is coordinated with their investment plan, which is coordinated with their tax plan. We put those 3 together. We've done that with emcthebundle.com. That is Echo Mary Charlie thebundle.com. So back to when to plan. Let's think about this. The market is near all-time highs, and some people are saying, okay, the market's pretty frothy right now. We have a lot of novice investors that are pumping money into. One example was GameStop. I mean, it was a sleepy stock, and all of a sudden it hit over $400 per share. Now it's in the $200 range. Well, that says there might be some novice money in the market flowing in, not your long, steady investors, but speculators. And so if you're concerned about protecting some of these gains, then you may have to have a plan on protecting these gains. Because if it's in a mutual fund, we know the market can go up and down. If it's in stocks, it can go up and down. If it's in bonds, the value of that could go up and down. About the only thing which doesn't change in value is our cash that we have in the bank or in our brokerage account. That doesn't change in value. Now, because there's no change in value, that means it's not going to get a big rate of return for you as the investor. But how do we protect that gain? Well, we make an analysis and say, you know what? If we have this gain in a certain account, we can actually capture that gain, lock in the gain, and pay no tax. That's number one. Number two, we can place this in an instrument which, A, your principal is 100% protected. It's no longer subject to market risk. And number three, when you want to take this out on distributions, you can. There's going to be no penalty on taking those distributions. But when the market goes up, then you participate. When it goes down, you do not participate. Now, these are instruments, financial instruments, and they are fixed index annuities. Basically, you are putting your money with an insurance company. We understand that. Make sure it's AA, AAA rated. So therefore, not likely that insurance company is going to go away. And therefore, when you, A, participate in the market going up, the index, and they have different indexes, the Dow Jones, the S&P 500, could be a European index, but whatever it is, then you participate in a percentage of that. So a quick example of the way this works is we remove your capital from market risk. Let's put a $100,000 example. So now we move this in here. Well, you can't lose your $100,000 unless the insurance company goes broke. That's not likely. So it can happen, though. That's the risk of exposure. So you're basing your $100,000 on the claims paying ability of the insurance company. So when this then is monitored or credited your interest based on the index, usually there's a participation rate. So it says, okay, if the S&P 500 index goes up any percentage, you get 80% of that gain. So if the S&P goes up 10%, you would get 8% of that gain. That gain is credited to your account. So in our example, you would have $108,000 of value that gets locked in. And let's say that crash that everyone's worried about does happen and the market goes down by 30%. Then your capital, the 108, actually, it is 100 of capital, 8 of gain. That is your new account balance. That does not participate when the market has this, quote, crash or correction that everyone's worried about. So is this an instrument for all of your money? The answer is no. I'll be the first one to tell you that. Is it oversold by insurance agents? The answer is yes. They prey on fear. But if it's part of when your plan is for the amount of assets that you want to protect from market risk, preservation of your capital could actually be more important than a return on your capital. So that's something we have a conversation with. Again, to start that conversation, if you like what you hear here on the Professional Edge, do give our office a call at 877-654-9798. That number again, 877-654-9798. Because the time to plan for that, quote, market crash is now, before the market crashes, so you can protect the percentage of capital that you want to have safe and secure for your safe and secure retirement. Again, to start the conversation, 877-654-9798. That number again, 877-654-9798. We're going to have more coming up here on The Professional Edge. My name's Todd, tax attorney, CPA, and certified financial planner. I appreciate you listening to The Professional Edge. If you want to share this with others, do pass along our podcast. It is Professional Edge. All you got to do is go to Google or iTunes and type in Professional Edge. You'll see me there with a blue shirt on and my 5 o'clock shadow. Talk to you then.
With today's financial markets, are you getting the personal and professional attention you and your money deserve? Clients of estate management counselors benefit from having one set of professionals advise them on their tax, estate planning, and investment advice. We call that the Professional Edge. Todd is a tax attorney, CPA, and certified financial planner. With over 15 years' experience, he welcomes the opportunity to assist you in preparing for retirement, implement effective tax planning strategies, and to help you properly plan your estate. His radio show, The Professional Edge, is aired weekly on Sundays at 9 a.m. If you're interested in meeting with call his office at 877-654-9798. That's 877-654-9798. Do you want to feel more confident about making the right investment, tax, and estate planning decisions? Today, these decisions are more complex than ever. Have you thought about working with a professional advisor and not sure who to turn to? Not sure what qualifies one to be an advisor? Todd is more than qualified as a tax attorney, CPA, and certified financial planner. Is with estate management counselors. Estate management counselors operates as an independent fee-only investment advisory firm. They're dedicated to gaining a personal understanding of their clients' objectives and implementing professional counsel and advice to achieve those objectives. So take a second to talk with Todd to learn how you can benefit from their multidisciplinary practice where they coordinate their clients' legal, tax, and investment strategies into one comprehensive and integrated plan to enhance and protect their clients' financial security. You can reach estate management counselors and speak with Todd by calling 1-877-654-9798. That's 1-877-654-9798.